Bismillahirrahmanirrahim and Assalamualaikum and Salam Sejahtera to everyone. In this video, I'm going to discuss on question 4 of June 2019 for ACC406. So for the student, you may download from EQPS, alright? Okay. So let's look at question 4. So question 4 is on the partnership, accounting for partnership or partnership accounts, alright? Okay, so in this question, you are required to prepare statement of profit or loss and the appropriation account for year ended 31st December 2018. Alright, and then to prepare both capital and current account for all partners as at 31st December 2018, and then to state two functions of profit or loss and the appropriation accounts. Alright. Okay, however, I'm going to prepare answer only for A and B. Okay, so let's look at the information. Ali and Aifa started a partnership business sharing profit and losses in the proportion of 2:1. Their partnership agreement are as follows. Number 1, interest on capital is to be allowed to all partners at 15% per annum. Salaries to both partners is 6,000 each per annum. Interest on drawing carries 5% per annum. The capital and current account for the partners as at 1st January 2018 are as follows. Okay, so we have capital balance of Ali 30,000, of Aifa 40,000. Okay, the balance for current account Ali is 5,000 and Aifa is 4,000. During the year ended 31st December 2018, the net profit of the firm was 214,500 ringgit. Ali withdrawn 10,000 on 1st July 2018 and Aifa withdrawn 5,000 on 31st October 2018. Okay, respectively. Aifa also gave loan of 12,000 to the firm on 1st April 2018 and the partners are entitled to 8% interest per annum on any loan provided to the partnership. Okay, so the first thing that we are going to prepare is the appropriation statement. Okay, we are going to write down the title, the name of the partnership, Ali and Aifa. Alright, and the name of the statement. Okay, so the year ended is on 31st December. It is very important that we understand when they are going to close the account. Okay, because we need to make sure that our computation for the interest on capital, interest on drawing, alright, interest on loan, if any, salaries, okay, are correct. Okay, so usually I will prepare 2 columns, okay, for the computation. Alright, and I'm going to start with the net profit. Okay, so the net profit is 214,500. Okay, and then let's check whether we need to adjust this net profit amount. Okay, so to adjust, we may look for any information on the accruals, prepayments, if any omission to the transaction, if any. Okay, so here what I can see is we have a loan. All right, we have a loan by Aifa of 12,000 ringgit on 1st April 2018. Okay, but alright, but there is no information whether the loan, whether the interest on loan has been paid or not to Aifa, okay, on this 12,000 ringgit. Okay, so if there is no information, I think it's good that we assume that we need to adjust for interest on loan. Okay, so why do we need to adjust at the net profit? Because we treated interest on loan regardless from which party. Okay, is it from the bank, is it from the partners, is it from the other person? Okay, regardless of who gave the loan to the business, all right, the interest on loan that we are going to calculate is to be treated as the business expense or the operating expense, meaning that the amount should be deducted in arriving the net profit. All right, so if it is not yet deducted from the net profit, then we are going to make an adjustment. So I think it is safe here to assume that, all right, no interest on loan has been made to Aifa. All right, okay, so I'm going to adjust this amount of net profit. Okay, interest on Aifa's loan. Okay, how much? Okay, look at the principal, 12,000 ringgit. Okay, multiply with the rate, 8% per annum, but 8% is for 1 year. Okay, but the loan, the loan is given by IFA on 1st April 2018. So we're going to calculate the computation of the interest on loan is on a timely basis. Okay, so we are going to start the computation, okay, from the date IFA gave loan to the business, which is on 1st April 2018. Okay, so April, May, June, July, August, September, October, November, and December. So 9 months. So 9/12. All right. Okay, so interest on loan is an expense, so it will reduce the net profit. Okay. All right, and if we look at from this question, from this information, okay, there is no other information for the adjustment to the net profit, so I'm going to calculate the amount of adjusted net profit. All right, and then I'm going to add. Okay, and then we're going to start with our appropriation statement. Okay, we are going to take into consideration, okay, all the transaction that happened between the firm and also between the business and the partners. Okay, so number one is we are going to add if there is any interest on drawing to be received from the partners. Okay, to be received by the business from the partners. All right. Drawings. Okay, on the Ali. Okay, Ali and IFA. So Ali and IFA. Right. So Ali withdrew 10,000 ringgit. Okay, and interest on drawing is 5% per annum. Again, we need to apportion this. We need to calculate starting from the date Ali withdrew the money. Okay, not for the whole year. We're not going to charge Ali for the whole year. So on 1st July. So July, August, September, October, November, December. So 12 months, 6 months over 12. All right, what about IFA? IFA, the amount of drawings is 5,000. Okay, multiply by 5%. Okay, and then we're going to apportion according to the month. Okay, starting on 31st October. So October is not included in the computation. November and December 2/12. All right. Okay, so that is the total interest on drawing. Okay, and then we are going to less. Okay, interest on capital. Okay, interest on capital. Do they entitled to receive interest on capital? Yes, at 15% per annum. Okay, so Ali, based on the opening balance, all right, 30,000 ringgit times 15%. Okay, and then IFA is 40,000 ringgit times 15%. Okay, all right, and then the computation is Okay, so the total interest on capital is, okay, I'm putting there the negative sign because this is less. Okay, right, and then less salaries. Okay, to be paid to the partners, if any. Yes, for both partner, 6,000 each per month. Okay, so Ali, 6,000 ringgit times 12. IFA. Okay. Hence the total is, all right. Okay, so we have take into account the interest on capital here, salary here, interest on drawing here, all right, and then the net profit here. Okay, interest on IFA's loan here. Okay, and then all right, and then there are partners entitled to 8%. Yes, okay, so we have considered every information given in question 4. So next is to calculate net profit before appropriation. Okay, so that is the net profit before appropriations, meaning that before we allocate the amount of profit to Ali and IFA. So now we're going to calculate share of profits to Ali and IFA. Okay, so share of profits. If it is share of loss, then we are going to write as share of loss. Okay, so partners, current account. Okay, Ali. So the Ali's part is 2 of 3 times, calculate to the nearest RM. Okay, IFA is 1/3 based on the profit sharing ratio agreed by them. Okay, so that's it for the appropriation statement, as simple as that. Okay, so as long as these two, okay, you get the same number, all right, and then you have take into consideration all the information given, all right, in the appropriation statement, and that's it. So the next is the next thing is to prepare capital and current account for all partners. Okay, so let's prepare that one. Okay, so I'm going to start with the partners capital account. So we have only two partners, Sally and IFA. Okay, all right, so that's it. All right, so the first thing, as usual, is the balance, the opening balance BD. Okay, so this is capital account, so 30,000 ringgit for Ali and 40,000 ringgit for IFA. Okay, next. Okay, next is to look for any information that will affect the partner's capital account, right? But so far, from the information that we have here, there is no information that will affect on the partner's capital account. So that's it. So we're going to close this one. So at the end of the year also, they're going to have the same amount of capital balance. Okay, next, let's prepare the partner's current account. Okay, so we're going to start with the balance BD, or the opening balance. Given in the question, 5,000 for Ali and IFA is 4,000. And that says we are going to transfer whatever information that not yet received by the partners, okay, in the appropriation statement to partner's current account. Okay, so from the information that we have here, okay, none of this has been mentioned that that the partners already received, okay, their parts. All right, so everything then will be recorded in the partner's current account. Okay, all right, so we're going to transfer whatever that we have recorded here to here. Okay, starting from interest on IFA's loan. So whatever that we deduct in the appropriation statement, because the appropriation statement is prepared on the behalf of the business. Okay, so anything that the business has to pay to the partner, it will be deducted here, but in the partner's current account, okay, it will be added, okay, in the partner's current account. Anything that will be deducted here will be added, okay, and then anything that has been added here in the appropriation statement will be deducted in the partner's current account. Okay, okay, so we're going to start from the interest on IFA loan. So this is deducted from the business, okay, to the partner. So partner receive interest on loan. IFA is 720. Okay, next, interest on capital. Okay, and then we have interest on drawing. Okay, when we add interest on drawing, don't forget to also minus, okay, or debit drawings from current account, because drawing reduce the equity. Okay, and then what else? Interest on loan, interest on drawing, salary. All right, so let's transfer everything. This is interest on drawing. Okay, and then we have here interest on capital. Right, and then we have here salary. Okay, drawing by Ali is 10,000 ringgit. Drawing by IFA is 5,000 ringgit. Okay, this will reduce the equity. Okay, next I'm going to calculate the total for both sides. Okay, I'm going to put it somewhere here in order for me to calculate the balance CD. Right, I forgot to add another one, share of profits. Okay. Okay. All right. So this one need to be adjusted. Okay, so as we can see here, the credit side is more than the debit side. So the balance CD will be here. Okay, finish. Calculate the total. Okay. Alright, so we have finished with the partner's capital account and partner's current account. So let's look at again. Okay, so for Ali and Aifa in the appropriation statement, okay, we are going to start with the net profit, and then we need to prepare an adjustment if there is any need for adjustment. Let's say, for example, if there is any interest on Aifa's loan. Okay, and then after we have calculated the adjusted net profit, we're going to add with any interest on drawing, less interest on capital, less salary. Okay, and whether or not this item appeared in the appropriation statement is depending on the partnership agreement. Okay, if there is information on that, then we are going to include here. All right, and then we are going to calculate net profit before appropriation. All right, and then after that, we're going to calculate the share of profits, okay, for every partner. All right, and then we're going to transfer this amount to the partner's current account. So in partner's current account, we are going to record amount which has not been received by the partners yet. If it is already received, then we're going to remove, because the partner already received the cash, okay, or the money. All right, any accruals, okay, to the partners will be added here in the partner's current account. So in this question, since there is no information on the amount received, so we're going to assume that there is no amount received by the partners yet, okay, for year 2000, for year ended 2018. So everything will go here from the appropriation statement, okay, plus the drawing. All right, so we're going to add anything that we deduct in the appropriation statement. So interest on loan, interest on capital, and salary. Okay, and then we are going to deduct, okay, whatever that we add in the appropriation statement, which is the interest on drawing. And then we are going to add also the appropriation profit. If it is lost, then we are going to minus, we are going to debit, and we are going to debit also the drawings, because drawing reduce the equity. Current account is part of the owner's equity, partner's equity. Okay, all right, and then partner's capital account, since we have a current account, meaning the partner's capital account is a fixed capital account. So if there is no items affecting the capital account of the partners, then there is no need for us to adjust, okay, anything in the partner's capital account. So that's it. Okay, so we have finished. Right, so this is the partner's capital account. Okay, and this is the partner's appropriation statement. Okay, thank you.